Welcome to another episode of Phillip Trading Podcast. My name is William, and our speaker today is Trent, which is our Phillip Futures Senior Marketing and Dealing Executive. Okay, so gold has hit a 5-month high. Gold prices has hit a 5-month high as US reported another jump in consumer price index in October. So let's see what Trent has to say about gold prices, and is gold price ready to go even higher? Okay, so for those that are watching this podcast, feel free to share this section on your Facebook with your friends, okay? And you can also comment in the comment box below if you have any questions about our podcast section today. So Trent, how are you today?
Yeah, I'm feeling good, excited to be back.
Yeah, good to hear that. Okay, so first question here for you is that what do you think is the key driver for gold prices to go up to hit the 5 months high?
Okay, so the key driver for the surge in gold price is actually mainly due to inflation is soaring in pockets of the world's largest economy. So in the US, consumer prices are racing at their quickest level since 1990. In China and Japan, producer prices are shattering forecasts. Germany, the fourth biggest economy in the world, is among other nations seeing the same trend. Inflation has been the core of one of the biggest debates across global markets all year, whether the spike in cost is transitory, as the Fed said, and what the US Fed and other central banks should do about it. The way the Fed sees it, inflation is largely being driven by supply chain bottlenecks as a result of the COVID-related restrictions. Policymakers argue that as the pandemic fades, these issues should sort themselves out without the need for their intervention, such as aggressive interest rate hikes. But at this point, right, the transitory inflation has already stuck around for a lot longer than many has expected. Inflationary pressures look likely to last for several more months at least. That's intensified the search for assets that could weather price pressures, such as gold, a traditional inflation hedge, or a more controversial Bitcoin, which is viewed as a store of value. But countering high inflation is not just a matter of raising interest rates. Central banks also have to nurture the post-pandemic recovery. If they don't, they risk plunging the world into recession anyway. The pressure is increasing with each new inflation reading.
Okay. So next question here, Trent. So gold usually, right? For gold price, usually when we talk about gold, it is always performing better during uncertainties. Okay, when there are uncertainties, gold price always perform better. So with economic recovery, with consumer price index, as we know, consumer price index is a benchmark for how of the strength of the market. So how people spend. So the higher the index, it means that the more the people spend. Okay, so with consumer price index going new high, okay, and initial jobless claim in the US fallen to the lowest level since March 2020. Do you think gold breaking out the 5-month highs is sustainable with economic recovery?
Okay, yes, no doubt the US economy is recovering from the pandemic with improving economic data. However, uncertainty still remain in the US labor market. There was no real improvement in labor supply, with the participation rate remaining at a woeful 61.6%. So nearly about 40% of the people in US of working age are not engaged in the labor market in any meaningful way, and with companies desperate to hire the jobs figures could be so much better if workers were available. This in turn is holding back the productivity capacity of the US economy. So growth is not as good as it should be, while boosting wage inflation pressures as companies compete for staff. This is one of the main reasons why the Fed is reluctant to contain inflation aggressively after considering the labor market situation. With inflation flying high and stagnant labor market, the short-term risk remains and will likely to provide additional boost to the gold market.
Okay. So seems like you are still bullish on the gold price. Now, next question here is related to the US dollar. So US dollar index, right? It has bred above the psychology level of 95 to reach 15 months high. Do you think gold price will have pressure to continue to go up with the strengthening of US dollar?
Okay, so historically, the dollar index is negatively correlated with the gold market. However, a more dovish Federal Reserve and current low real interest rate environment have been beneficial for both gold and US dollar index at the same time. The low interest rate and high inflation environment is good for gold market due to hedge against inflation as bank deposits are generating low returns. At the same time, US dollar index also received a boost from the market expectations that interest rate will rise faster than expected despite the Fed still maintain a wait and see stance. In addition, commodity currencies such as Australian dollar and Canadian dollar had performed relatively poor after a growing number of investors are selling commodity currencies on expectations that Fed's tightening will drive down commodity prices. Hence, in short, as long as the Fed remains dovish in their stance to contain the current rate hot inflation, the uncertainties will increase in the short term and will be beneficial to the gold market.
Okay. So to conclude our podcast today, do you think investors should wait for opportunity to short gold, or should investors ride on the uptrend, considering the fact that the prices of the gold right now is quite high, and from the breakout point is quite high from the breakout point. Do you think investors should ride the uptrend, or should wait for opportunity to short?
Okay, so based on my early explanation, my suggestion to investors is to look for short-term opportunities to long the gold market. So basically, just ride on the uptrend whenever there's a pullback. You can always look for opportunity to enter. And as long as the US labor market remain below the Federal Reserve expectation with no improvement in the participation rate, I foresee that the Fed will not take aggressive stance to contain the current inflation, and which is this is also the reason why it's beneficial for the gold market.
Okay. Thank you for your sharing today, Trent. So once again, if any of you here listening to this podcast are interested to find out how you can trade micro gold, because we are currently also doing a promotion on micro products where you can trade small contract gold at just $2 brokerage. So feel free to drop us a message via the Facebook, and one of our representatives will try to contact you as soon as possible. Okay, and thank you once again, Trent, and probably I will see you next time. Thank you.
Yeah, thank you. Bye.
Bye.